Alright guys, so on this video we're going to talk about a trade that never actually took place. Although the trade never took place, I still want to analyze what we saw that's to potentially give us a trade and go over the analysis and then take a look at what could have been but never was. Alrighty, so on the daily chart, let me show you what I saw to identify a potential trade entry. So if you come over to let's see, this is Saturday morning. I got this signal for this potential trade. It was on a Wednesday. It was based on this candle right here. Let me go in and put a let me add an arrow to show you guys where the entry was, potential entry was, because again, this trade never happened. So I take this, yeah, right there on this candle right here. That's where I got the trade signal. Okay, now let me remove that arrow. So since I got the signal to go short, as you can see on my modified TDI, price was turning down, crossing back below the 50. On my overbought, oversold oscillator, you can also see where on this candle right here, the close of this candle, my momentum oscillator gave me a cross below my 70 level, showing me momentum turning back to the downside. And of course, we are in an overall downtrend on the market. So the things that I look for to actually give me a trade signal on the daily chart, the things that I look for to tell me to go short or go long, those qualifications were met on this trade. So I started to plot in my potential entry level, my stop loss, in preparation to take a trade. So let's go down to the 4-hour time frame. Let me show you guys how I set the stop loss, and then we'll go over to the 1-hour time frame to show you how I set the potential entry that was never hit. Alrighty, so let's go to the 4-hour. And again, why do I go to the 4-hour? I mainly use the 4-hour chart or the 4-hour time frame to just button up my stop loss, right? From this line, when you look at the different session breaks, from this line to this line on the 4-hour chart represents 1 week of price action or price data, 1 week. So based on this line and this line representing 1 week, I go ahead and put my stop loss behind the swing high or swing low of that week. It all depends on which direction of the market that I'm trading. In this instance, I would have been taking a sell position. So I go ahead and plot my stop loss behind the swing high of that week. Again, reason I choose the swing high is because if price pulls back and it starts to trade above this swing high, then I know that I'm clearly in the wrong direction of the market, and I need to be getting out of this trade as soon as possible to preserve my capital, my working capital, okay, and to protect my account. All right, so here's a stop loss. Here was the entry. So let me go and show you guys why my entry was here. Let's go down to the 1-hour chart. Here we go. So again, this line represents the day that gave me the signal. That move is what put me gave me the signal that price wants to go short. This day, the beginning of this day on the 1-hour chart, is the actual trading day. So here's what I was looking for. Keep in mind, you're not going to see anything beyond this day, this price action right here, once I'm setting my stop loss and potential entry into the trade. So You don't see this huge move yet because it hasn't taken place. This is basically what I was looking at. Based on my analysis, I was looking for price to fall back, to retrace back up into this area. Let me just draw a line there. I was looking for price to retrace back up into this area, this level, somewhere around this level, and then give me an entry to sell short. That was my analysis on the trade. As you can see, for the most part, the analysis was correct. What kept me out of this trade was price didn't pull back far enough, and it didn't hit my sell limit order. It never put me into the trade to go short. What a bummer, right? So price missed my entry by about 7 pips, 6 pips, 8 ticks, so about 7 pips. It never hit my sell order, my sell limit order. Therefore, I was never triggered into the trade, and I had to watch price drop over 200 pips in the direction that I thought price was going, right? So what could I do? What could I do, right? I noticed price when it got up around here that I wasn't in the trade. But being that we don't chase price, I didn't take a sell order. I just didn't go in and put it in a sell position because price could have pulled back. Price could have came back here, bounced off any level of support, and came back and hit my stop loss simply because I was chasing the market, right? That's not what we do. Sometimes you miss trades. Sometimes your analysis is almost correct. You miss your entry by a few pips. But what you don't want to do once you miss your entry, you don't want to chase price. You want your setups to be, for the most part, very mechanical. That is the only way that you can truly determine on whether or not the strategy or the setup or whatever you're trading is truly a good strategy, or if it's profitable, by not adjusting the strategy. So with the strategy that I trade, the new level strategy, my signals come from the daily time frame. I drop down to the 4-hour time frame just to button up the stop loss, because again, from this line to this line in this trading session represents 1 week of price action. My stop loss usually goes behind the high or low of that week, because I'm swing trading the market, meaning the trades usually can last between 1 day, 3 to 5 days is usually the time frame that my trades normally last. So it's within a week. So I put the stop loss either behind the swing high or the swing low of that week, again, depending on which direction that I'll be trading the market for that week. Then I go down to a 1-hour chart to basically set my entry, make a determination on whether or not I think price is going to pull back, or if price is just going to continue on. If I thought price was just going to continue from this point here without any pullback, I would have just took a sell order right here, probably just entered the market either on a sell stop order or just a regular market entry order, just execute it right then. But like I said, I figured price would pull back. My momentum oscillators was telling me price was about to turn over. As you can see it right here on my oversold oscillator, price was turning over, so I just thought price would pull back a little bit more. It didn't. We never got executed into the trade, and the trade ran on for about 200 pips. But hey, you win some, you lose some. This is a trade that never took place. This is like the girl that got away, right? That one girl that you were dating that was like the best thing for you, and she kind of got away, and that was the one. That's how I felt with this trade. But nevertheless, there's plenty of opportunities available in the market. Just don't want to analyze trades that either win, but some trades we lose some trades, and some trades we never get executed into the market. So there it is. This is one we missed out on, but hey, we'll get the next one. All right, have a good day, everyone.